Hello, chart watchers and DecisionPoint faithful. Welcome to this Monday, March 8th, 2021 DecisionPoint show. My name's Erin Swenlin, and I am here with my father, Carl Swenlin. And we're going to show you the charts that we think you need to see going into this week. We have lots to cover. How's everything going for you, Dad?
Doing great.
Excellent. Always good to hear. All right, well, we'll do our typical overview of the SPY. I'm going to talk to that as well as the big four: dollar, gold, oil, and bonds. We'll look at those. And then Carl's going to take over with talking about the decline currently going on in technology. We'll take a review of some of those big large cap stocks. We'll be talking a little bit about yields and what we're seeing right now as far as those increases. Still have bubbles out there, a lot of bubbles. So we'll talk a little bit more about that. I'm going to do a sector overview at the end, and then I'll finish with my diamond of the week. All right, let's go ahead and get it started. First of all, let's look at the DecisionPoint sector scoreboard. We did end up with a new signal for consumer discretionary. We saw XLY's 20-day EMA cross below its 50-day EMA. Now, that occurred above the 200-day EMA, so we went into a neutral rather than a full-on sell signal. Neutral, you can see down here, it's basically a position that's in cash or fully hedged. So right now, consumer discretionary, not really the best place to be. We are seeing some neutral signals that have been in place for some time on consumer staples and utilities. But I have to say, I'll talk a little bit more about this later, but those two sectors are starting to see some improvement. And given the market is getting soft, a lot of times you will see a rotation into those more defensive sectors. So I'll be talking more about that when we get further in. All right, let's go ahead and look at some charts. I'll, of course, start here with the DPA 5-month candlestick chart of the SPY. This is the chart that pretty much is our lead off in our DecisionPoint alert every day. And, you know, it was interesting today because obviously I did have a trading room this morning, a free trading room. Just go to our homepage and you can sign up for it there if you haven't yet. And we were seeing the market rising. It was looking pretty good. A lot of the stocks we were looking at were looking pretty good. But obviously we had a problem at the end of the day. In fact, I'm going to show you the intraday chart just quickly here. This is a 10-minute candlestick. And you can see there is where we opened, had a really nice move, but we formed a double top. And at this point, we've hit the minimum downside target. And instead of bouncing, we ended up seeing a lot of last minute selling. So, you know, we got that little bump off of that upside initiation we were talking about last week, but it looks like that may be over already. All right, back here. Okay, so we are above the 50-day EMA, and you can see that price did find support right along this area here from previous support level, and then we did get that bounce. And we are back above the 50, which all is, you know, a positive, except for the fact we can't seem to get back into that rising trend that we have there. So that's a problem. We did see total volume decrease a little bit today. One of the issues that I have is the VIX on the inverted scale, again, oversold on the bottom, overbought on the top, is the VIX is remaining under its EMA. Typically, when you see the VIX under its EMA, you're going to see a lot of volatility, obviously, and typically that shows you internal weakness. So despite getting this bounce, you know, it's not looking too good. You know, we have volatility is still high, and it's not the best time to be in the market, to be perfectly honest.
You know, I hate to talk about cycles, and I vow that I'm never going to talk about them again, but it's just too juicy right here. You notice that the green arrow, the last green arrow, it was 3 days to the right of And but after the uh, subsequent market action, I decided to go back and say that that cycle low occurred where it is right now. You'll notice that coming out of that cycle low, the high the next day was the high right now for the cycle. And that's at this point a severely left
Yeah, translation.
left translation cycle, and also look at the mess, the choppiness around, and all the red candlesticks. I mean, it's. I don't see this turning just now. I mean, it's looking pretty awful.
Yes. Seeing the decline into the end of the day too, I think gave me a lot of pause because again, it was looking pretty healthy earlier in the day when I was in my trading room, but it certainly turned south this afternoon. And that I think we got what we were going to get. And I'm going to show you the upside initiation, our climax chart here. And you can see that on Friday, we had net AD was very positive, came out into our climactic area where these blue lines are. And really it came in at right off of a decline, and it was an upside initiation. So the expectation for us was that we would probably see a bit of a bounce, but as I told my DP Alert subscribers, not something that will likely stick around. And, it might be as short-lived as just today's move in the middle of the day. And now we're back into a decline. So
the new lows, I'm sorry, the new highs, there's a spike in new highs today, which is the best one since early this year, the beginning of this year. But that was an intraday reading. And if we were measuring it based on the close, it wouldn't be that high for sure.
Absolutely. And that's something that I have been asked about. When we get these negative net advanced declines, how in the heck are we getting new 52-week highs? And that's because we take it, how many during the day hit new highs, not necessarily if they finished on them. All right. So we got the upside initiation here, and it looks like it's already faded. So not looking too good there. And again, like I said, with the VIX staying underneath its EMA, it's telling us likely we've got more to look forward to here. Now, I was starting to see a little bit of positiveness, if you will, on some of the short-term indicators. In particular, the percent PMOs rising. We did have a little bit of a rising bottoms here to the declining bottoms, and that's usually what we look for a nice market bottom. However, there were a lot of other signs that weren't quite so positive. Currently, when we look at our intermediate term indicators, yes, we did see them rise a bit today, but overall, if you look at this, we have that rounded top going on. We're still in a declining trend with these particular indicators. And that's, basically confirming what we already know, but, we're still not in, I guess we could say we're more toward neutral territory on these indicators, but honestly, when I look at them, I still see overbought conditions. All right, let's look at the big four. All right, so on the dollar, we finally got some really great indicators to tell us that maybe this was actually going to be the bottom for the dollar. And it was a little bit shaky there coming out of it, but the last 3 days, obviously, really nice breakout. We've been looking at a double bottom formation, and I'm actually going to take it to the 1-year chart. And that formation on Friday had technically executed. You've got that upside breakout from that confirmation line, but seeing today's action as well and moving above this area of overhead resistance tells me that we should see the dollar continue rising. If we were to measure for an upside target here, it would take us pretty much to this level of overhead resistance. The 200 days coming up, that 200-day EMA, that could pose a problem. but we did get an intermediate term trend model buy signal on the dollar. Gold. Now I'm going to show the 6-month chart, but honestly, I don't think it's that helpful. We can really hone in on some of the indicators here. Gold is obviously very oversold, but the chart that I think really tells the 1-year chart. And as you can see, we are sitting now, gold is on very important support. This support level really needs to hold. If we lose this support level, honestly, there's not a whole lot of support left until you get down to that 1450 level. So, based on the indicators, the PMO momentum is still to the downside here, but the RSI is getting very oversold. And so you could maybe look at that in a positive light, but honestly, we just got that 5,200-day death cross, negative crossover, and gold's just not looking that good. This is the point where it does need to turn around, but I just don't see enough here to tell me that we will get that turnaround. Quick look at gold miners, which haven't been doing much. And if gold is going to be continuing on a downward trajectory like it is, it's going to put a lot of pressure on gold miners. And currently they've managed to hold on to this support level here at that June low. But, it's getting a little dicey. I have to say that the indicators are trying to wake up here for gold miners. Finally starting to see a little bit of improvement on participation, but overall long-term, you can see that golden cross is still in decline. The PMO is trying to turn back up, but it hasn't been successful. And if you look at that silver cross index, that's looking pretty ugly. And the BPI, it looks like it moved mostly sideways today, but overall is in a declining trend. So I can't say that I like miners. I don't see enough.
That before you go,
yeah,
I'd say that flag that we've got going there in the last 6 days, 7 days, something like that.
In the thumbnail here.
That in itself is encouraging. I mean, so if you're looking for something good about gold, this would be it. And gold is very oversold. The miners are very oversold. So yeah, that I like, but that's liable to break down, next tomorrow. You can't tell. There's certainly no. I'd like to see the PMO turn up at least.
Yes, before I would get too bullish on it. It's really struggling, and again, if gold does break that support level, that's going to make it really hard for miners, I think. All right, let's look at USO, obviously in a beautiful rising trend. We got a bit of a pullback today, a little over 2% on USO, but overall that rising trend is still intact. We got the bounce off the 20-day EMA, which seems to be the support level right now for crude oil. We also are seeing a very nice golden cross going on right now on USO. We just saw the 50-day EMA today cross above its 200-day EMA. So that does give us a bullish bias here on oil, but it looks like there's a good chance we might get that pullback again to the 20-day EMA.
Can you take a look at the weekly?
Absolutely.
We're basically, it occurred to me today, we're back to the bad old days of how energy is being treated. And that, would be an encouragement for prices to go higher. So right now it's at 65 a barrel, and it could be up to that. I wouldn't see any problem with going past that and up to at least that 2018 tops. Maybe even higher. I don't know how far back. We'll look at the monthly. What the heck?
Sure. This one or the?
I would like to. WTIC.
There we go.
So you go back to 16. Where was it in 2016? Well, that's difficult. In 15, it was up a lot higher, 100. I'm not getting much right now. So,
yep. I mean, the main thing, we are seeing a possible breakout from that declining trend in the very long term.
Right.
But, you know, and the PMO is on the buy signal. This is really, I like that. I like seeing that breakout on the monthly chart. We'll have to see how it finishes the month though.
Okay.
And finally, TLT. And again, this is another one where you need to get to that 1-year chart to find some support. And I know you're going to be talking about yields, so I won't get too far into the weeds here, but you can see we're at a really important support level. And honestly, this is another one where the weekly chart, I think, is the most helpful. So you can see that right now, if you go by this bottom back here from the first quarter of this year, that's acted like a pretty good support level. But honestly, when you look at where true support lies, you're looking more down here in the 130 range. You know, that's going to take you toward that top we had back in 2016, the lows we had here back in 2019. That is a good support area. But what's going on with yields? Well, I'm going to pass it to you, Dad.
Okie doke.
Got it.
Let me move something out of the way. Okay, yield chart here. This is, yield has been, the longer term at least, have been rising since August. And we had a short consolidation, but it started up high. I think the consolidation is just about right because I don't think they're going to come crashing down. They could correct some, but this is not parabolic, painfully parabolic at this point.
Right.
Okay, and then the 10-year yield, you notice we haven't updated yet today. So, but the 10-year yield was 1.587, so it's higher, and which leads me to the story. They have been reporting that the tech sector is having problems because of rising interest rates, long-term interest rates. I don't get that, but that's what the story is. But the point is, they have, tech stalled out in August, same time when yields bottomed, and they've been moving sideways for quite a while, well, since that time. And notice, here's Apple, it's down almost 20%. Adobe down 22%.
Oh, finished near its low today too.
Amazon, now going off of this top, but it's down almost 20%. And Facebook, again, from the September top, it's down 20%. Google looks fine. It's consolidating, but it's not showing the weakness of the rest of the tech sector. Let me just, Microsoft is not doing that badly. I don't have it marked, but it's obviously having a little pullback, but nothing to be concerned about. And Netflix, it's going from this top to the bottom of the channel would be 21% decline. Actually, I guess you'd have to say from this top so far, it has declined, whatever that is, maybe that's 15%. And finally, NVIDIA is over, it's over, well, it's almost 25%. So there's some stress in this area, and I'm sure most people know about it. It's just that, as last week, I think I started looking and said, well, if you look at this in this context, this doesn't look real serious, but that is a lot. That is a lot. Look at Tesla. Tesla is down 40%. And who knows? Could go a lot more because there is no fundamental value except maybe down to maybe around here. Maybe there's some fundamental value in 200, 250 range. Bitcoin, we've got two parabolic rises, correction here. Now it's correcting out of this rise. Don't know where it's going to go. Again, there's no fundamental value in here at all, but it's just a matter of how excited the traders get. Let's see, I had some items that I wanted to cover. Okay, that and some of the news items I picked up this morning. Merck has come out with a, let me just put Merck in there. Okay. They've come out with a COVID pill treatment rather than a vaccination, which would go to hydroxychloroquine. That would be, another treatment, but this is the first treatment that has not been politically tainted yet. So possibly it'll work out. But that's really good news that there is some treatment coming along, because right now it's like you get it and you die or you don't. And so that's encouraging.
Yeah.
And then one of the things, we've got a couple more indications of bubbles territory. And one of the news items of today was that, I think it was, I forget now who did the poll, but they polled people, investors from 25 to 34, and I'm sorry, 18 to 24. And I'm sorry, 18 to 34. And between 40 and 50% of them say some of their COVID relief check is going to go into the stocks. Okay. Nutty. And also, I'm not sure if I mentioned it last time, but you can trade cryptos now on PayPal in values of as low as $1. So, we're just sucking in everybody, Maybe that would be fun if you're only playing for $10 or so. But anyway, there's the bubble coming to get us.
Yeah, we keep hearing all of these crazy anecdotes, doctors quitting their jobs to day trade, and, kids buying homes off of their Bitcoin. And there's a lot of things going on out there that usually happens right before a bubble.
Right. And you can't deny if, in fact, all that money does move into stocks, what the heck did we do it for? But if it does move in, it's going to drive prices up again. Like I said last week, I think, I wish we had twice as many public companies for people to invest in, so we wouldn't be pouring all this money into this group that we currently have. It's just inflation going like crazy, too few stocks and too much money.
Yeah, exactly. And it is pushing prices. Everybody knows how overbought this market currently is. It's not it's almost rocket science, right? Because what we do is so technically hard, right? But, most people are, it's pretty obvious that the market is at these highs. We're in a volatile zone right now. It's very volatile, and that typically is not good for the market. All right, well, I'm going to give a quick little review of the sectors and explain to you where I'm going as far as my diamond of the week. But overall, when I look at the sectors, discretionary, tech, comm services, all of these are in decline, right? All of the, we might be getting, it looks like a top below the signal line there for XLC, but in general, these are certainly not the areas you want to have the majority of your stocks in your portfolio. I like to go find the ones that are just starting to wake up, if you will. And currently that is materials, which I've already been talking about plenty, so I'm not going to go there. But consumer staples and utilities, you can see the really nice breakout that we got today. And we were already seeing these start to break out on Friday, but you can see that nice little curve there. We might get that positive crossover very soon. So I have to say, you know, with the market looking soft, you know, if you have to be in the market, you know, it might be worth your while to start, you know, looking through these sectors and finding the industry groups you like, and maybe moving a little bit over into a more defensive position. So let's go ahead. I'm going to pull up the sector. Actually, we're almost out of time. So here you go. Utility, Edison is the one that is my diamond of the week. We have a falling wedge, bullish pattern, got the breakout, 520-day EMA positive crossover, and a beautiful positive divergence on the OBV. It did get hit on a pullback today, right around that 50 and 200-day EMA. That does make me a little concerned, but I really like the setup on this chart for a few reasons. RSI is positive. Again, I really like it when I see a positive OBV divergence leading into a rally. Typically, it's going to continue. Here is what I'm looking at as far as relative strength. And at this point, you can see this is the group, industry group, against the S&P. I'm going to get this out of the way here. So the group against the S&P is starting to wake up, as you can see, and this is the group of the conventional electricity. You can see that Edison was already beginning to outperform the S&P, and within its group, it's a strong one. It's in a rising trend as far as outperformance within its group. So if you're going to go with one, I like to find the ones that have strength within their group, and certainly I want to see that move to the upside. Now, I do like Edison. There is one other one I'm going to show you. And this is actually in the staples area. This one I actually presented it on your Daily 5 is my diamond of the week. And this is Tyson Foods. I really like the way this one has broken out. You can see that $70 area. You know, I know it's overbought. That's something we do worry about. You could wait maybe on a pullback here toward that breakout point before you consider getting in. But again, look at the performance. You can see that the food industry here, food products, is really outperforming. You can see that Tyson has already been outperforming the S&P, as well as outperforming its industry group. So I have to say, you know, if I'm looking in these areas that are starting to show strength, I want to try and pick out those stocks that are already showing some outperformance. And obviously this one it's coming out of a nice trading range. But once you break out, you usually are going to get a pullback toward that breakout point. And so that would be, you know, add it to the watch list, and it could be a really nice one on a pullback. And that's all I do have. Any parting remarks for our listeners?
Not really.
I think, as I keep saying from the old Hill Street Blues, you know, after they do the brief, be careful out there. That's that would be my advice right now. Happy trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.